Joe, what's happening?
What's going on, man? We here. We back another day. This was a beautiful day, man. I'm excited about today. It's all because of you. I usually don't even really look at the markets in the afternoon, but I did today because we was coming up to an area that I was excited about. I know I'm jumping right into it, but
Yep. Big move happening right now, actually, as we
right,
speak.
we're actually at a level. If we weren't getting ready to close, I would probably still be active. We broke when we broke one of my levels, anyways, was the breaking of 59.24. So once we broke there, got short. And now we're sitting on top of a level. I would have took that 58.87, 75 and took that bounce, but I'm like, we're too close to the close here, which even still there, it still bounced right back up to 5,900 from that area as it looked like it's trying to break lower. But it was like, oh man, we coming on to some levels I've been sitting and waiting on for us to retest. Let me see what's going on. So
it was a key one there for sure. So no doubt.
I did take some trades this afternoon.
Good deal. Well, you want to dive in here? I think we're going to do a little candlestick overview today. Since we're always showing candlestick charts, we thought this would be a good natural progression for our next item that we want to share with everyone. So let's go ahead.
Yeah, because it'll help everyone as we, like you said, as we're showing candlestick charts, right?
Yeah, it won't be foreign. When I'm talking about wicks and bodies and momentum and why I'm seeing it, you guys will have a better idea of exactly the reasoning behind that. So let's go ahead and get this started. So first thing, just a little background on candlestick charts. They're a visual tool used in financial markets, to track price movements like assets, stocks, forex, cryptocurrencies. It originated in Japan in the 18th century by a rice trader, actually, with the last name of Homa. I'm not even going to try to attempt that first name because I'll probably butcher it pretty bad there. But but this technique has been around for a long time. And I've even read some stuff, with the early originations going back to the 1400s. So, this is hundreds of years that people have been using this type of stuff. This is definitely not the only thing that we use. There's a lot of other little things that go in it, but this is one of the big things that you can use to get a clue on what the market is going to do next. So, what it does, it shows that market sentiment in a clear and intuitive way. So more than just a basic line that's going up and down. Each one of these candles actually means something, and we're going to talk about that here in a second. So let's start with the anatomy of a candlestick. So if you look at this one on the left, this is a bullish candle. So bullish means it's going up. So we open here at the bottom, and then we drive up, and then we get to your close here. And then we have these things on the top, these little lines, and those are called wicks. So the wick on the top, that's as high as that candle got during the time period. So each candle represents a certain time period. So you could look at, so when we go on that 120-hour or 120-minute chart, that's representing 120 minutes of data that's in there. When we're looking at the 30, each one of those candles represents 30 minutes. When we're looking at the 1 minute, each candle represents 1 minute. So that's everything that happened during that time period. That's what we're looking at when we're looking at each one of these things. So the colored portion in there, they call that the body of the candle. And then let's just move over here to the bearish side. So we would open up here on the high. It might have pushed up a wee little bit to create that wick on the top. And then boom, we come all the way down. Maybe went down a wee little bit further. And then where it closes, there on the bottom. So you can see it. So that's sort of the anatomy of how these things are made up, and some of the lingo that goes around it a little bit. You have any questions on that, Adrian?
Nope. I think that's great.
Cool. All right, so let's talk about reading these a little bit. I'm not going to go through each and every one of these. If you guys want, we could share this presentation with you, so you can come back and look at it if you want. But just some important things on here that I want you guys to pay attention to. These candles that have these big, large bodies, this long candle here, this Mariposa candle here, and then these two also in this area. What that's representing is that there's big momentum there, and it all held. So people started to buy, and they kept buying, and they kept buying, and they kept buying. So like this, on this Mariposa here, we started at the bottom and we closed at the top. There's no wicks on them whatsoever. So that's just a pure bullish candle, like nothing else to it. I mean, just bulls in control. There's no argument about who is running the market at that point. If we move over a little bit, we got one here called a spinning top, and this is one that I referenced, I think, on our first episode that we did. When I was talking about the one oil trade, we had a doji and a spinning top that were right after it. And what this one represents is a little bit of a battle going on in the market. The bulls and the bears are both tugging and pulling. They're pushing it up, pushing it down. They can't really get anywhere though. So you start to get like these plus sign looks to them. That's what the doji down here. See that little plus sign. So when you start to see that, you can tell that there's a battle between the bulls and the bears, and it's really a sign of uncertainty of who's going to be the next one to come out on top. If we move over a little bit, we have this inverted hammer and the shooting star. These ones are pretty similar. This means we kind of went up. We probably found a resistance zone and started to sell off from there, basically. And now these are something that I look for all the time. So when I'm setting those levels during the market recaps, I'm looking at these big long wick candles. Those are some of the key things that I'm actually looking at. Usually a good indicator that there was a reversal there and that it's a strong price movement and a strong price level there. Next two we have is the hammer and then the hanging man. So if you look at them, you're like, all right, they look like the same thing, right? Well, they're not. And the reason for that is the position at where they're going to be on the chart. So a hammer is usually going to happen at the bottom of a trend move. So, we're moving down, and then boom, we stop. And then you'll see your hammer on the bottom, right? And then you start to push back up. A hanging man, on the other hand, like say we're driving up a little bit, coming up. We hit a little resistance area. We start to push down. We drive back up. That's when you get the hanging man. Now, these two mean two separate things. So your hammer at the bottom is a bullish signal, right? So that's signaling there's a possible reversal happening. But your hanging man, on the other hand, if you see that, that's an indication that there's some weakness happening in the market. So they look the same, but it's all going to be on the positioning of the chart. When we bring up the charts for the recaps, I'll show some examples of these just so folks can see them like right in the actual, in a live demonstration, essentially. The other ones down here, we got long wicks on these things. They're just different forms of dojis in a way. This one's a long-legged doji, so that just means it's a big battle going on, essentially. You had a big bull push, you had a big bear push, and now you're right back in the middle. And all of these kind of represent that same thing, these three here. Our gravestone doji, you'll usually see those ones at the top. Once again, we're looking for long wicks on these things. That means fast movement happened on it. Usually that's a signal that a big buyer or a big seller came in at that point. We want to be on the side of the big buyers and the big sellers. So that's why we're so focused on these wicks and why they're so important. The longer the wick, the more important the move. And really, when we get in the market profile a little bit, a lot of times these wicks will also indicate single prints, which is something that we'll kind of get into a little bit more. But you can see the single prints almost with with a candlestick chart when you're looking at these things. Any questions, comments on those ones there, Adrian?
I guess, I'm trying to think of what people may ask, right? If they were looking. So, and without getting too in depth, because of course I know a little bit more. So I'm trying to think of the basic questions. Because I know like the 4-price doji, I usually don't see those until like, depending on what time frame you're on in the opening of that time frame. And it's usually a battle.
I never see those. Yeah. the 4-price, that means nothing moved.
It's like nothing's moving. It's like a battle right there. It's not moving. It's not going anywhere. And then eventually it breaks out. I hardly ever see that one. I don't too much see, the regular doji that much either. I think the rest of them you'll probably see just about on our charts as we bring it up, and we'll
see them instantly as soon as we bring up the charts. We're going to see a few of these for sure, and we'll point them out today, so that way we kind of.
But those are a little bit tougher. I think you usually don't see those unless you're like actively looking at the market, like right then and there, and the price action is moving, and it's just kind of stuck in that area. It's not moving at all, and you'll see those. Okay.
All right, cool. So let's talk about some basic patterns. Now, these are the most basic patterns, and we're going to go into some more in-depth ones later on. I have some favorites that aren't on this slide, but there are a few here that I do pay attention to, so I do want to point them out. First one is your bearish engulfing pattern. So what we had here, we had a bullish candle that pushed up, and then the bears step in, and they basically eat that whole candle. That's how I think of it. They took it all out all at once, and they eat it, so they engulfed it. So that's how I think of the bullish engulfing, or the bearish engulfing, I'm sorry. On the flip side, you have your bullish engulfing. So you had the downside push, and then the bulls come in, and they eat that entire bear candle, so you have a bullish engulfing there. So the bearish engulfing is a signal for a sell normally, and then a bullish engulfing would be a signal for a buy. I mean, pretty simple, pretty straightforward. None of these things are 100%, that's for sure. The longer the time frame that you're looking at, the more powerful these are. So if you're looking at a 1 minute chart and you're looking at just straight little candlesticks like this, not great. I got to be honest with you, not fabulous. But once you get around that 30-minute and above, you can make something out of these then, especially these bullish and bearish candles, because you've had a lot more data in there. You've had a lot more time for orders to build up and stuff like that. So it's an important thing to keep an eye on or keep in mind while you're going through this stuff. In the evening star, so this is a reversal pattern that's happening. It's a 3-candle pattern. So you get your push up, you get almost a little doji there at the top. Sometimes you'll get a straight doji. Sometimes you'll get a little bit higher wick on there. And then you start to push back down. I actually have a trade set up where I'll take something if it crushes that bottom of our bullish, but someday we'll get to that one as well. So that would be a sell pattern. As you can see, the bears kind of took control then at that point. Next one here is our tweezer tops. And some people might refer to it as a double top. And that's usually what I call it, as a double top. But just for this slide, they have tweezer on here, so we're going to use it. So what happens there? You just have two tops right at the same spot, 2 wicks. That's showing, hey, we pushed up, seller stepped in, pushed down. And guess what? Buyers came back in, we pushed up, seller said nope, and they pushed it right back down one more time. So and then the reversal of that would be your tweezer bottoms or your double bottoms. And you hear us talk about double bottoms probably a lot. And it's the same thing, just the opposite way. Sellers pushed down, buyers stepped in, seller stepped in again, but buyers regain control and then take it over. So that would be your buy signal. We already kind of talked about the shooting star and the hangman and the hammer a little bit, so I'm not going to beat that dead horse again. I will show some examples here in a few minutes on that, what they look like in live charts. But any questions on those simple patterns, simple 2 to 3 candle patterns that we're showing here? We're going to show, we'll probably show a few other patterns later that are a little bit larger, stuff with like flags.
Especially as I do have a question because, our goal is to introduce them little by little, on how we trade, right? So based off of how we trade, what do you think are the candlesticks that we typically look for the most?
Large wicked candles. So like your shooting stars, your hammers, those are the ones that I look for a lot. Your tweezer tops, your double tops, love those as well. Sometimes when you see something like turning over, it almost looks like, to me, it looks like a rooster head on the top. You'll see all these little like wicks on the top, and I'm like, all right, here it comes. It's coming down then at that point, because you can just see the sellers are starting to take over. The buyers are trying hard, but the sellers then are just stepping in and just hammering it down over and over again. So really, honestly, like all of these I actually look at, in a way, shape, or form. I mean, there's not any of these that I don't look at. Those the bullish engulfing and bearish engulfing, those are also very powerful signals too, especially on the higher time frame charts. So, I mean, every one of these are important in my opinion. But the most important things are probably those wicks.
I would agree. I think that also as you become a trader, there are going to be some, I think, that probably stick out more to you, and you'll be able to easily trade off of when you see them. Rather than others. Sometimes it takes a little bit longer for me. And when I first started, the easiest ones for me was the engulfing candles. So bearish, bullish, those were the easiest one for me to see and spot and tell like, oh, okay, yeah, here we go. Got a nice little reversal going here.
Somebody just took control again. Yeah.
Yep.
So, and again, the higher the time frame, the more powerful these things are for sure. I'm going to keep repeating that because it's so important.
Yeah.
So let's talk about how we use these a little bit. We use them for trend identification. We'll look at that sequence. Obviously, more green candles means we're in an uptrend. More red candles means you're in a downtrend. Pretty simple, straightforward. We talked a little bit about the support and resistance and how those wicks can indicate that for you. So they're really good to find the support and resistance and to find those levels that we're constantly talking about every single day, and that those are what we use to trade off of. So, if you can find those levels, you can probably do this for yourself at some point. That's really that's the goal of what we want folks to be able to do, is be able to have this skill and do it themselves. Confirmation, you can use it for confirmation. So like we were talking about the engulfing patterns, if we're trying to see that reversal, if you see a good bullish engulfing pattern, that confirms that the reversal is happening then at that point. And then once again, I do talk about the time frames here. Day traders, they typically use those 1 to 5 minute candles. And then the long-term investors, you're looking at your 4 hour to your daily or maybe even weekly candles, if you're really, really long-term. So just a few key takeaways from this. Candlesticks, they are a snapshot of the price action and the emotion that's in the market at that time. I was talking about buyers taking control and sellers taking control. That's the emotions that are happening. We've learned the basics. I've talked about the body, the wicks. I've hammered on the wicks, the simple patterns, your dojis, your engulfers. So next thing for you probably to do, look at some charts, look at some candlestick charts. Start practicing, start picking these things out. Hey, there's a wick there. There's a bullish engulfing pattern that's happening. And start to see them for yourself. Go back and look at these things. And that's the only way that you're really going to learn it, is you start to just sort of develop an eye for it. The more that you do it, it's almost like an art form. You gotta keep hammering it. You gotta keep reinforcing it in your brain. And the best way to do that is just to be looking at charts. I mean, when I first started, gosh, I was looking at like hundreds of charts a day. I mean, it was crazy how many charts that I would look at and just go through. But I'm like obsessed with this stuff, so that's kind of how I roll. Any questions? Any thoughts? Anything else before we dive into the market recap for the day?
No, I'm excited to talk about this because I just so the tariffs has really put us in a bind here. Is this really why we're dropping so much based off of these tariffs? The 10% on China?
I think it's definitely a factor. We talked the first episode how we had this triple topping pattern happening. So we were starting to peak anyway, just from the looks of it. And I just think we're sort of carrying over that pattern. You never know what little news thing is going to actually finally push you to the bottom. But, the tariffs definitely are a big factor of what's happening. There's no doubt about it. Every time a tariff is mentioned, we see a little sell-off. So, it's certainly playing in.
Whew.
So this is our daily for today on the ES. This was our key level from yesterday that we were watching, that 59, 24, 25 area. We kind of splashed through that here this afternoon. That will eliminate my long trade that I had going on. It is what it is. It's not the end of the world. There was good risk reward on it. So it was worth a shot. And when we talk about risk reward, you'll see why I took that and what the reasoning behind the taking good risk reward trades are. I mean, you don't have to be right. If you have 2 to 3 times on your risk reward, you really only need to be right like 38% of the time to be profitable. So they're super important. But we'll come to that here soon. So as far as key levels for tomorrow on the daily, I don't think we're getting bullish again, in my opinion, until we get back over this guy there.
Mm-hmm.
Which would be at 60.2375. You could play some sort of like a reclaim of a level here. If we get, I would probably wait for this purple. So 59.36, that was that previous low that got took out once, and now it's getting taken out for the second time. If we can reclaim that, you might catch some bids there at that point. But for longer term traders, on the bull side, I would be patient now, and I would probably wait until we get back above there, or we could do some kind of aggressive like fake breakdown. Maybe down here if we dip below the 5,800 area, find some bids and start to push back up. You could try the same little sort of type of trade, but you're fighting the trend at that point. So,
fighting the trend, man.
Yep. So you got to be incredibly cautious. If you do decide to go that route, that's not usually the best route to go. Honestly, you got to trade with the trend to really be successful.
So a little, I guess for me, anyways, a little food for thought, especially when we coming down to those levels. Usually, what I do if we're fighting the trend, I tighten my stop, and I wouldn't look for as big of play as I usually would. So instead of me maybe, because I'm not going to fight that trend, right? So if normally I usually have 4-point stop, then maybe I have 2.5 instead, because if it's going to take out that stop, it's going to take it out and it's going to probably come hard. So that's typically how I play those. But usually I just see if it breaks through it and then look for the retest and then get short. That's what I did with the 59.24 area. Played out perfectly, which was one of our levels that we had. It broke. I waited for the pullback, got in, took a grip of points there. So that's why I got on the call today extremely excited, because like, yes. It played out perfect.
Excellent. Let's zoom in a wee little bit and see if we can find some other levels maybe for the daytime tomorrow that are interesting. Wow, look at that. Look at the size of that body on that candle there. That is a big momentum push down. So sellers are clearly in control right now, on that last 2-hour candle that we're looking at. If we look up here, we do have a little shooting star. And guess what? Look at that. It signaled, that we were pushing down at that point. So there's a good example of it. Right here at our 60.23, we have a good example of a double top. You see, or tweezer top, whatever you want to call it.
Mm-hmm.
You can see those two wicks there. And then we did get a nice little push down. It was definitely a tradable push down. I think we used that yesterday a little bit.
Yep.
So as far as the levels of interest, let's zap this guy out. Add a new one. It's low. Time is at 4:08. We could still get a little bit more in after hours. We'll see what happens. But for now, let's put it at 58.73. And then I am going to zap out that purple area because that was a reclaim from actually months ago. Which it did reclaim. And I'm going to change this now to purple. Since this will be my new. Actually, these two here are kind of my interest for that reclaim, because we have the old low, and I haven't marked their old low. And then we have this one that was our most recent at 59.24, which was our prior support, which will now become our next resistance level. So we could probably see something where we push back up a little bit, test into this area, and then start to head back down. That's probably the most likely thing that'll happen. But if we start to push back above this 59.35, I don't love this. Let's take it out. Let's zoom in a little bit and see if we can find maybe something. 59.35. You could maybe wait to this 59.77. Plug that in. Somewhere in there, that would be a nice little bull level if we can get back above there. But that's a lot of work that the market did. You're talking 100 points. So probably not tomorrow. Let's be real. I mean, 100-point days aren't. We've seen a few 100-point days here recently, but that's not the norm. We don't
very much not the norm.
See,
and I think
we
also
don't see this all the time. So
which is tough, right? Because we actually started the week where we see these, and it's been this kind of how it's been the week. So having people to understand that this isn't the normal. And so sometimes even for, you know, a novice trader, this might be hard to trade because that range is big and it's
Definitely.
whippy.
Very, very whippy. Yep.
Very, very whippy. So you have to be patient and you have to look for your areas of entry. Because what happened to me yesterday, which I talked about, right? I won the trade, but I jumped in because of my fear of missing out. It didn't go against me, but
Yep.
that's not something I want to make, you know, a habit of doing, because if
Certainly
that would have
not.
went against me, it would have hurt me. So this, I don't know, man. I'm a little nervous about, you know, ES and going into tomorrow. Honestly, because we're getting a little bit extended. That I'm gonna have to need to see some things to really be a player.
That was a big push there. But I mean, we had a nice big consolidation area there too. You know what I mean? If you look at this. So there was some build up in there. You know, there was a lot of people wrong right to that level, including exactly. Yep. So we'll see what happens. I mean, I think overnight, you know, if we see her chopping around a little bit tomorrow, we'll probably get a little push up early, is my guess. You know, to retest this area, or it could happen tonight, one of the two. But I would assume that we'll with this big of a body, you know, we're probably going to get at least a little bit of a recovery for this. I won't bust out Fibonacci levels or anything yet, but I have a feeling that'll probably be right around a key area. So, all right. So, any other questions, thoughts on the ES?
No, I'm not.
Any other levels you're interested in? Anything you're seeing that I didn't mention there?
I mean, no, that's really it for me. Which is why I'm like, we're right in the middle of, in the middle here, looking for a push down or a push up. But also, if we push down, I don't think I'm going to be taking any longs. I'll be looking for retest down of those levels.
Yeah, I mean,
and then maybe getting short.
We got a big one right down here that's still hanging around there open. So
yeah, and that's my next level down. If we just kind of
chop good ones
overnight.
Yep.
So
ideally, we would see a wee little push up overnight, and then it starts to flush back down through. You know, we want to see a little recovery before we get short again. That's kind of what we're looking for here. We want to see a couple greens here and there, just to kind of you know, the shorts have to cover at some point. There's a bunch of people short now at this point, so let them cover, and then see if the new sellers come in and then join that trend. That's kind of what we'll be looking for. Cool. All right, let's move on. Let's look at some oil. This is a good one
little boo
today.
My boo.
Yeah, man. Had the nice push up. We got our retest to that 70-13 area that we talked about yesterday. It's becoming key. You can see we got up there. We got a little wicked above it some, and now we sold back down. And we're closing like literally right on that level. So you can tell you know, it's a powerful area right there. 70 is a good whole number. You know, a lot of people like to trade those whole numbers, so not surprising that has become something. You know, on the daily, as far as getting bullish on this thing again, you know, I'm still looking at the 73.67 for a longer term bull. You can make an argument for like an aggressive move here. See how this candle starts at this point. We could make an argument for 71.31 if you want to take an aggressive long on a longer term. We're looking at a daily chart right now, so this is all longer term stuff. You know, you can make an argument for that, but you know, for my purposes, you know, longer term 73.71 looks like the best longer term level for me. This guy, we can turn it purple since we're reclaiming. Any thoughts on this daily at all?
No, I need now, because I mean, we pretty much, the areas we discussed, we pretty much hit. So now I need to
let's drill it in a little so we can sort of see it better.
Yeah.
So we'll go to the 120-minute first. There we go. All right. Now we did crack that little downtrend that we had going on there. So wouldn't be shocking if, and see how these two are lining up, it wouldn't be shocking if we come back maybe and test this, drift down a little, give a little test here, at the breakout area. We had this high. This is something we mentioned yesterday, and that was where the run-up began. So all these overlapping candles here, they were all wrong. So when we started to push up, they were all starting to unwind, and that's what caused your push up. So that's what started it. And so since that's where it started, there's a good chance that we'll get some kind of revisit to that area. So, if we drift down there, that if you're looking to do some sort of counter trend long, might be a decent spot there. However, if we just sort of chop around this, yep. We could tonight maybe chop around this 70 a little bit. I wouldn't be shocked at all on that. So you could get like an aggressive reclaim, maybe we get that pushback up to that 71.26, which I talked about on the daily a little bit. The other thing we could look at then obviously would be your high of the day, which should be 70.54. So you could wait for that to confirm, come above that, break out a little bit, retest, boom, back up to 71.26 is probably what you're looking at there on that. Let's go down to 30.
Yeah, go to the 30 because I think
for the you could probably play a little short side play here.
And that's what I wanted. Why I wanted you to go to the 30 because it looked like we got a short possibly coming up here. We'll see after the open.
Yep.
Maybe a nice
especially with the big run up today. We've put we've put a lot of work into the upside. So it probably needs a little break. So if we break that 69.86 area, there's a pretty good chance then we're going to test that breakout zone that we were just talking about. So, as far as any other zones, let's see. I don't see anything that's striking my eye. If I don't see it in like 30 seconds, it doesn't exist. So, honestly, they need to stick out like sore thumb so everybody sees.
That's your rule of thumb.
You want
if
other
it doesn't
people
stick out, it doesn't exist.
Absolutely.
Okay.
Yep.
I like that.
It has to stick. It has to catch your eye right away, or else it's not going to catch other traders' eyes. You know what I mean? And you want to be trading with other people. You want to be at those levels where other folks are active. So, if you're making up levels in your head and you're getting a magnifying glass out and you're examining them closely, and you think you're spotting these hidden levels. Hidden levels aren't great. You know what I mean? You want the levels that people are trading at. So, I don't see anything else that sort of sparks my interest here. So I think that's pretty much the plan on oil. Long over 70.54, short below 69.83, and maybe a retest long down here at 69.28. So that'll probably be what I do tomorrow for the most part on oil. Any other additional ones for you?
We're good to go there.
Cool. All right, let's back her back out. And we'll go to our daily and look at the gold. So we got something cool happening. We're getting a wee little bit of a breakdown here. We got all these overlapping days that have happened. We had that huge uptrend that I've showed, 10 times already since we started doing this. But it's enormous. So we are still in a big uptrend, but we're starting to see a wee little bit of weakness, maybe a crack in the armor. So we broke down today. We closed below, which is usually something those longer term traders are looking for. Where's it close? Not necessarily did we break the level, and we got that close below. So not necessarily saying, it's a short here because we're in such that, we're in that huge uptrend, but we do have that gap below that's still open. So, there is a reasoning of why, it might push down a wee little bit more. Most of the time gaps get filled. Some people say they always get filled. I've learned that's not incredibly true. Maybe eventually a year later or something they'll get filled, but short term, they don't always get filled. But there is one fairly close, within 100 points there. So, there's definite chance that maybe we drift down. It's not going to be a straight line down by any means, because we are in that uptrend. Bulls are still going to be active, so we're going to get some pushes up here and there. So you got to be cautious with it, but there's definitely something interesting happening. And on the daily, you could almost declare that, at least on the short-term basis, it might be getting a wee little bit bearish. So, you have any thoughts on that?
No, I'm with you. So, because I have 2886, that area is definitely something. Yeah, right there, which we're we're literally right on top of it, which sucks. As we close.
Well, tonight's session will kind of hopefully give us a clue, before we get up tomorrow, or what it really wants to do. If we come in tomorrow and we're back up around this 29.15, 29, heck, even 2900, really. If we're back above 2900, it could be some kind of fake, failed breakdown, and we're going to push back up. But as of now, right this moment, it looks a little bit bearish. So let's do the old zoom in. All right, so let's zap this guy out since it got a little bit.
And then you see it's coming right on that level from that low. I mean, it almost touched it, but with light volume, but it's still there. So that's why I say we're coming right on top of a couple levels that
absolutely
could fill a gap. But hopefully it waits for tomorrow, because tonight I'm personally not trading tonight. I'm burnt out from today, so
So we do have a little double top area here around 2900. So like I just said on that daily, I think if we're over 2900, we might be getting firming up a little bit on the bid. And if we get over there, this 2908 and a half. We got 1, 2, 3 wicks there at the top, so it's hit there 3. So that's a pretty key level for sure. So if we're, we're coming up, we're holding above these things, it's probably bulls getting back in control, just because of that longer term trend and what it is.
Yeah,
we're still in a bullish market, so we want to take those bull signals seriously. This one, don't worry about that. That was from this morning, and one of my overnight levels, which actually worked great. Okay. Let's look at a 30. See if there's anything else that sticks out. Not really.
No.
I mean,
we're kind of like
same levels. Yeah. Yep.
Yeah. Right on top of levels, or got a little space in between areas we're trying to test. So. Patience.
That's why I was just gonna say, be patient with it. Let it show you. Let the market show you its hand. Before you jump in here on this one.
Because some days I only take one trade. Like I'll be like, I don't see nothing else, Jordan. I'm done.
Yep.
I only have one. In that, I know that was something that was tough for me, especially when I first started. Was like, I'm sitting here watching for a few hours and I only took one trade. No, I got to take something. Like, I'm going to take another trade. Like, I'm going to force my hand to take another trade. Looking back, hindsight, like, bro, what were you doing? That was the dumbest thing.
Over trading typically only makes your broker money. Because all you're doing, you're paying commissions then at that point. You know what I mean? You're not,
It was horrible.
Yep.
I mean, I would scalp. So because I was like, I got to do something. Like you said, I would scalp and, make like 30, 40 bucks. But I'm paying like $10 in commission. So.
Exactly. Yeah. Not worth it. Not worth it. So just wait for your levels. Wait for the market to show you what it wants to do with those levels. That's the key, man. Be patient at them. Let the market tip its hand. Go with it. That's really all. That's the biggest thing there is to it, honestly. So
yeah.
All right, man. So with that being said, I don't know. Do we want to look at anything else, or are we good to go for today? We want to look at NVIDIA real quick since they had earnings.
Yeah. Do we want to look at? Because I know we talked about that we would look at some regular stocks, a couple of them that are popular. Look at that, baby.
Well, yes. Right. Yesterday we had talked about how NVIDIA is one of the bigger players in the S&P 500, and look at NVIDIA; it's pushing down, and in conjunction, the S&P 500 went down today at the same time. So, not a coincidence there at all.
Right.
So, I mean,
all the major
definitely,
players are down.
yeah. I mean, look at all these guys. I got NVIDIA over here, Apple. Everybody was down over 1%. All the big boys. Some of them 2% and more. And they've been drifting down for a few days, really. So, yeah.
Yeah.
What do we have? Energy was up, and financials. Those are the only two sectors that were positive at all. So it was definitely a bearish day. Bears were in control. We'll see what happens tomorrow. This was the candle off of those earnings. So there was definitely some confusion with it. If you look at it, we open up here, boom, push way down. So it was interesting. Some people got trapped. That's for sure. There's no doubt about that.
What's your feelings hurt on that?
Yep. So, all right. Wow. Well, what did the VIX do today? Whew. Yeah. So there's fear. There's fear creeping in. So the VIX gives you an indicator of what the market sentiment is and how people are feeling, basically, and based off of put call ratios. How many people are selling puts, how many people are selling calls on the options side. That's a lot of how they base the VIX. And you can see it's opposite usually of what the overall markets are doing. So if you see the VIX pushing up, usually the markets are going down. If you see a VIX pushing down, usually the markets are going up. They're opposite of each other. So this is another confirmation, that we are getting a little bearish. So
yeah.
All right, buddy. Well, I guess we'll call this another episode, and we'll get back at it tomorrow. I think tomorrow we're going to go over some trading resources, some books, and various things that folks can maybe look at over the weekend if they're feeling spunky, I guess, or have some energy to do a little extra. We're going to give you guys some ideas on that stuff tomorrow. So that'll be our educational portion. And of course, again, we'll go through all of our charts. If you have any individual stocks that you want us to evaluate and look at, just let us know. I'm more than happy to do a live breakdown on here for you. So just shoot us a message and we'll get after it for you.
All right, guys. Thank you for tuning in. Have a great one.
All right.
Rock them ticks.